Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to our chartist Bill Rook from Redmayne Bentley. Bill, it's been quite a time on the markets. What did you think of trading last week?
Very quiet, uncertain, but not too bad. It wasn't sort of falling away too fast. It was sort of finding its footing, I think is the word.
Okay, now we've got a couple of charts to look at today. We're going to look at a housing chart that you've compiled. That's a comparison between the UK and the US market. And we're also going to look at the FTSE 250. Let's start with housing first, because there's a lot being written about it at the moment. Now, take us through step by step what this chart actually compares. Right.
At the bottom, we've got the S&P Case-Shiller 10-City Composite, which we're looking at the overall trend of where the housing market is going since 1987. And what I've done there is added a red moving average on that and put a horizontal blue line on there to give you an idea of when the thing breaks out.
Right.
And it breaks out in 97, which is very similar to the Halifax monthly non-seasonally adjusted for the UK market up top, which is very, very similar at the top when it breaks out. So clearly housing then was in trend up mode from 97, 98 onwards. And
having been flat for quite a while.
Yeah, it's been flat since both of them, actually. Very funny. Have been 89, 90, have been flat for a good, I suppose, 8 years. 8 years of flatness, really. 7, 8 years of flatness. And then suddenly it sort of breaks out and they both go together.
Now, what is the one in the middle telling us?
Well, this is the comparison between the two. We have the bottom against the top. So, startlingly, the American market has been outperforming the UK market since year dot, really, and since 87. And the big sprint came from the American market in 2004, 5, and 6, and then boiled over mid-2006. And has started to underperform that of the UK market, which has been more stable, and has gone to a parity level now, which is for the first time ever. So we're at parity with the American, or the American market is at parity with ours. So we're more steady, they're more volatile. They had a big shove upwards and have corrected more sharply because of that. So it's difficult to read where this is going, except the trends continue until they don't. But there's certainly a big cooling off in America, and whether things continue, well, this is I suppose they do until they don't, as we would say.
And what conclusions can you draw, if any, for the UK market?
Well, I expect the UK market to cool off rather than slump off, and the American market, well, it is falling fast, and well, until it ceases to, nothing goes up in a straight line or falls in a straight line, it will do so until it doesn't. But it doesn't bode very well. But it's a wait and see, really.
Now, looking at that UK chart at the top, where do you see support coming in? If this is a trend that is beginning to go into a downturn now, where will the support kick in? Do you think
that's going to kick in if it's going to find support at about the 500 level?
Right.
Which is about 20% off from here.
Right.
Yeah,
okay,
somewhere like that, 500 level. It's never that accurate, but it's a sort of that's where the last sort of major area was, perhaps. So around that level, we'll be looking for that, perhaps. Yeah.
So the charts could be predicting a 20% fall in house prices.
Something like that. I mean, it might not happen in one go. It might just sort of cool off, but it certainly looks as if it's sort of heading towards that way. I mean, if one wants to sort of look for a support level, yeah.
Okay, Bill. So good news for homeowners there. Now let's move on to the FTSE 250 index, which for the last, well, quite a while, I mean, I can't remember how long, certainly 6 or 9 months whilst we've been looking at it, and you've been showing us this chart from time to time over that period. You've said that it's been underperforming the FTSE 100, and you haven't liked the look of it much. What do you think of it now?
Well, back in January, don't forget, I also said there probably might be a low point there. And it happened it was, and that was where the Ulster Index, the second box in from the left, from the right, is near the bottom there, and everything looked very much oversold. And from there, we have a bounce upwards towards the big red line coming down, which is the 50-day. And now we're challenging that 50-day. Volatility is dropping off. The first box on the right suggests that we may have peaked on the volatility front, and we might be turning towards a positive now. And why I'm also very positive is April is historically a very, very good month for the UK equity market. So it might be sort of trying to pick a low point, not really trying to pick a low point, trying to pick a reversal point, and it might be here. It might well be here. I've liked the shape of the market today. We've been down 150 on the 250. We're only down. We're actually up 50 now. So this is a good sign. A fall in the morning, a rally during the course of the day, and coming up to April. If you see last scan leftwards on the chart there, you can see what happened last April. It wasn't too bad. It actually was. It turned in a green performance, followed by May, and then sort of sell in June last year.
So, at what point would you commit yourself to buying this index?
Well, I wouldn't. I mean, the thing is, again, buying fresh money going in there now, perhaps with the iShares. Where would you commit is possibly, depending on how you trade, you really go in on the really bad days as the optimum point. Like in January, when everyone wanted to pull out of the market, that's the optimum point to say, well, okay, I want to go into the market. I'm looking to go in. You would go in now looking with a support level of about 9,500 around that level if you're using a stop to go in now. But it's the sectors to watch out for historically. Actually, the strongest sectors to look out for, and we'll look at these a bit later on, is the oil and gas. Well, one of the oil and gas sectors is coming up trumps in the second quarter. So I want to look at that one later on in a future broadcast to see how that's going. And the oil shares have remained relatively stable, and I'll be picking from there rather than actually going for the whole index, perhaps. So it's sector picking, and within that, the strongest shares in that sector. I still believe in holding on to strength rather than trying to play weak shares, and that's just my trading style, because I believe that if there's strength there, then truth will come out from that in terms of performance.
Bill, always interesting to chat with you. Thanks for joining us today. And yes, we'll look forward to having a closer look at the oil and gas sector in the FTSE 250 and any other ideas that you and charts that you have in the next 7 days or so.
Thanks, Charles.
Bill Rook from Redmayne Bentley. Thanks very much for joining us.
Chart of the Week with Redmayne Bentley.